Awesome. Okay, so we're recording now. Today we're going to be, it's part one of the day trading models series, right, that we're going to be running. This is a part of the day trading series. It's kind of like a series within a series, so don't worry about it. Don't let it hurt your brain too much. And one thing that we're going to do is we're going to actually review a trade that we took today that was on GBP And first and foremost, I want anybody who can, please, I would like you guys to give it a go, give it a crack and see. All right, what can you guys see here? Why do you guys think that we sent this trade out?
So first of all, break of structure and mitigation, then price boom up.
All right, that's a good answer. Anybody else? Does anybody else have an answer that they would like to share?
In terms of Wyckoff, there is an accumulation.
Okay, I not quite. I don't trade Wyckoff. I don't use it, but essentially, in this case, not exactly. There's not exactly accumulation here. But I do see your point. So I'm going to teach you guys a very simple way of seeing things like that. In just a moment. Does anybody have any other thoughts?
The price has already taken buy side liquidity and moved down and given a break of structure. So price will surely mitigate and then go on its way of taking out next more liquidity.
Right. That's very good. And right here, we actually see something very interesting. So remember that whenever we look at our day trading models, firstly, the first thing we want to do is we want to look at trades within the hour, right? So usually within the hour is the best time to look at your day trading positions, right? But there's also a complementary time frame in the 30-minute. The 30-minute is a very subtle change on the 1 hour, but it does reveal certain things inside of it. So one general rule of thumb is that if on the hour there is a larger wick or there's a lot of unknown space that you don't understand what's going on there, zoom in and you'll see price a little bit more clearly on the lower time frames. Now, first of all, we want to measure, right, how much our CVDR is, right? So it's from body to body. So it's around 25, 30 pips. So it's an okay day for us to trade, right? It's an all right day for us to trade. Now, because remember, the maximum range of our CVDR is 30, 35, 40 pips, right? If it's beyond there, we don't want to touch it. Now, another thing that we would like to see, right, in this case is what is going on right here? What is going on right here?
Price has consolidated for the overnight and it take the sell side or the Asian range liquidity. Then it shows the perfect break of structure, means you can say that buying volume or buying pressure get increased in the field, and then it's surely missed my entry, but it's activated the entry which is given on the chart.
Okay. So all right, that's a pretty good explanation. Now, one thing that I want to capitalize here or focus on right here is what is going on here? What is this?
Sir, mitigation.
Liquidity
Not
grab.
quite. What is this? This movement right here.
Liquidity grab.
Right. So it's a liquidity sweep, liquidity sweep, liquidity grab, stop run, all the same thing, right? So there's a liquidity sweep. Generally, originally it was called the liquidity sweep, right? People changed its name to not, seem like copycats, but essentially it's called a liquidity sweep. All right. So this is one of the first essential things that we need to learn, the liquidity sweep. So we see a liquidity sweep here, and now we see a break of structure. So the two important things that's going on here is first we have a liquidity sweep, and then we have a break of structure. If there's a break of structure here, what can we expect afterward?
Pullback.
mitigate.
Right, exactly, a pullback, right? So pullback, mitigation, both same thing. Now, in this case, what things would we expect, or what things would we kind of, what would we target as our entry? What would be our entry in this case? There's a couple things that you could have used.
Maybe
specifically-
50% of the candle that produced the break of structure or the base.
Right, so you're using the order block, right? So
Mhm,
that's
order
that's
block.
the order block. That's
Yes,
one.
50% of the order block.
All right, we already said 50% of the order block. Does anybody have any other
Or use the fib. We can use the fib to see. Like
Fibonacci?
maybe the
Yes.
78.79.
79. Yeah, perfect. Right, you could have used the 79% or the 88.6. Yeah, that's perfectly fine. Let's say we could have had sniper. There we go. Yeah, absolutely. You absolutely could have, right? You absolutely could have. What's the last one that I'm looking at? So for us, like I'm not discrediting the fib at all. The fib is great. Just for us, that's kind of like a crutch, right? So like usually a fib works because it fits into it fits into the theory of extremes. And the theory of extremes is a very simple theory that it's just essentially price prefers extreme pullbacks to stop out and get as many participants out of the market as possible. So in this case, right, we have a perfect example of that theory of extremes being placed right here. And so fib counts, right? But it doesn't count in the sense that it's like it's kind of like a crutch. So you use it kind of as a confirmation, not exactly as an entry point, in my opinion, right? So for my students, it's like, come on. But what other thing do you
What's
guys
about
see?
the week? What's about the week of the second
This right here.
blue candle?
Yeah. So this right here is something that I would have tripped a lot of people up. Now remember, when a candle in and of itself, when a candle is reversed like this, when an order block is formed, or a quote unquote order block, right? Actually, let me go to the 15-minute real quick. No, so it doesn't show it here. Dang, that would have been a nice example. So disregard that. Let's actually take it from another approach. So whenever there is a candle, right, and you see an order block, and the order block, like the block that's supposed to be the order block, which is the down candle, right, because there's a bullish order block, when the candle beside it is actually not engulfing it, meaning it's not bigger than the actual order block, this actually is not the order block. The order block is this now, right? The order block ends up being this right here. So this is not the order block, this is, right? So now we take it from right here, and that's our entry, right? Now Zay extended the stop loss because obviously the broker that we're using to manage the account that we're using, the broker is not very user friendly. So we had a little bit larger of a stop loss. What was it? How many pips was the stop loss that he set?
16.
It was 15.
Yes.
Oh, it was 16. Yeah. So he set the exact same stop loss. Yeah. Yeah. So never mind. He set the exact same stop loss. Now, the wick, right? The wick that had happened when he sent out the signal, the wick had already happened, right? And that's actually fine, because the wick, the moment that the wick happened, it was kind of confirming that price was actually trying to go down there. It just needed to clear this fair value gap first, and then from there it would go down and track it and then come all the way back up, right? So this was essentially discouraging retail traders from trading into this, and then from there it took as much liquidity as it wanted. So right here we have the actual order block that we were specifying, right? And then from here we had a pretty nice entry, and now that we've got our entry, we've got our stop loss. Next is our target definition, right? That's what it's called, target definition, or essentially pick your target, right? And so now what target are we going to focus on? What do you guys think? What target should we focus on?
To get to the previous order block.
0%, zero of the fifth level.
Previous structure, sir.
Right. So there's previous structure, right? I saw a couple answers, right? That are correct. Now, the first answer that I saw are correct. One
We
second.
use fair value gap as a target.
One second, guys. All right. So now,
Hello, sir.
yeah, go ahead.
Sir, I have a question. Sir, can you repeat this? Hello.
Yeah. What do you need me to repeat?
Sir, I didn't understand that how this is not an order block and this blue candle is an order block.
Oh, okay. So essentially,
Small
right?
concept.
Usually an order block. How is usually an order block traded? Usually an order block is a smaller candle, right? It's usually a smaller candle that looks literally like a rectangle. It usually has little to no wick. It's very defined, right? And then the candle afterward is bigger, right? It engulfs it, and that's how you know that's an order block, right? Because there were orders, some orders were triggered, and it pushed to create a break of structure, right? Now, in this case, right now, we see that the actual candle that's supposed to be the order block, right? Because by definition, the order block is the last opposite candle to the direction that break of structure happened. Break of structure was bullish, so we look for the last bearish candle that was marked right before the break of structure or the origin of it. In this case, this candle is actually smaller than the engulfing one next to it. So if it's actually bigger than the one that's supposed to be engulfing next to it. If it does that, then what happens is you don't need to have this candle right here is no longer the order block. The candle that's smaller is, right? So this candle right here is going to be the order block, and that's the one that you want to take. Now, you wouldn't be wrong to use this as an order block. Just the more accurate version of it would be this, right? You could still reach for 50%. Just this one would give you a better entry, and that's the one that we took, if that makes sense.
Yes, sir.
All right. Awesome.
Sir, this blue candle means order block. There is a small wick, not a small but medium size wick. Is this a problem or not?
No. And this one, no. There's no problem.
Okay,
Do you
okay,
know?
sir.
Do you know why there is no problem?
Because it's the one going up.
No, it's because of what happened beforehand. So this liquidity sweep, it doesn't matter how much of a wick there is. There could be a wick all the way down here, and that'd still be an order block because it caused the liquidity sweep. So this wick is just price extending to catch as many orders as it can.
Mhm. The one prior to that, it shouldn't have a big wick.
Yeah. So let's say this didn't cause a liquidity sweep. First of all, that wouldn't be a really great order block. But secondly, what would happen in that case is this, right? This and it would have this big of a wick. I wouldn't take it. I wouldn't be confident in it.
I have a question. I'm sorry to ask.
Yeah,
I
go
should
ahead.
know this maybe. You said something on the CBDR and how you calculate. What is that?
Okay, so not to take too much time away from class, The CBDR is very simply just an abbreviation for the central bank dealers range. It happens from 2 p.m. to 8 p.m. Eastern time. And it's essentially when the banks, when they have least volatility, but they're also setting up for the next day's orders. So that's outside of the IPDA true day, right? That's outside of the algorithm's movement time. So it's essentially basically when they like, it's essentially between volatility, like in between the times that the market is volatile, the banks will end up pushing some of their orders in or pushing some of their limits in, and the algorithm will have to compensate for that. So it's at this point, if there is a lot of movement during this time, you generally don't want to trade during the next day because there will be a lot of manipulation. If there is a smaller CBDR, then you're fine. You want to trade that day because the manipulation will still be present, but it will not be so wild that it'll stop you out even on the most, bread and butter setups.
Is how do you calculate it? Do you go from like the low to high of that interval?
Yeah, so you just measure it, right? It's just in pips. You just measure it from the top body to the lower body. So in this case, it's 25 pips.
What indicator do you use to measure that? I like that one.
It's the patty trading sessions.
Okay, perfect.
Yeah.
Thank you so much. I got
Yeah,
it.
no problem. Okay, so now returning back to class, this is actually a profile that I need you guys to memorize. Okay, this is a profile that I need you guys to memorize. One last thing. So somebody said previous structure as target definition. Perfect, right? That's absolutely perfect. And the reason why I told Zay, and actually we were on the phone earlier today, and I was like, hey, bro, we should probably end up taking profit around this point. There's no point in getting greedy. And he said, yeah, you're right. There's probably going to be, a push, but, let's not get greedy. And I was like, yeah, all right. Because, recently the weeks have been very manipulative and slow. So we haven't been able to make as consistent, or sorry, not consistent, but as strong of gains as recently these past few weeks. I was like, let's just take this 4% and get out. He was like, yeah, all right, let's do it. And the reason why is because price had already reached previous structure, right? And at this point, it could have violently shot back down and covered this, right? And we would have went from 4.5% to 2. So that was the reason why I said, you know what, let's not take the risk. But you could have easily pushed up and made your target this order block. You could have easily made this your order block. Now, this is also another example of of the similar concept right here. You see that the larger candle ends up being your order block, right? So this no longer is the order block. The next candle before, or the next candle after this. So that's why you would have put it there. And essentially, if you would have taken a sell from there, you actually would have been in profit, right? Though I don't think it'll hold. But essentially, what I'm trying to say is, you put your take profit at previous structure, which was right here. And that's exactly why we secured about 4.5%. And you guys should have too. Did anybody take this trade with us?
Yes, I took.
Awesome. So you guys should remember, right, that whenever you're taking one of our trades, it's very important that you guys exercise risk management. At this point, that should be basic, but that's something that you guys should be exercising. Can you take entry at the bearish OB? No, that's not a very solid order block, right? That's not an order block that you want to take, not in my opinion. Not right now, not unless you get confirmation later, right? That's not something that I would want to do, right? So this is actually a profile that I would like for you guys to memorize. Okay, this is a profile that I would like for you guys to memorize. And the reason why is because this is actually one of those day profiles that appears a lot during your trading. Okay, so I need you guys to memorize this as soon as possible. And instead of giving you guys this, very weird drawing picture, I'm giving you guys real life examples. So this is going to be the first one, right? So you have a liquidity sweep. Here we go. It would break of structure. And remember, guys, the people who are here are the people who are getting these notes. I can't send these notes to the Telegram anymore. Okay. There you go. All right. And now from here, you get a return. Do you guys want me to turn off my indicator so you guys can get a cleaner screenshot? Do you guys like it like this or like this? I think like this looks better, right? How does this look? And actually, let's look at it. Let me try something. Oh, that actually looks pretty good. How does this look for you guys? We can take it both ways. We can take it in line or in candles.
Candles looks nice. We understand candles.
All right. Does everybody have the screenshot?
Yes, sir.
Yes.
Is everybody ready to go?
Yes. But can I see one more
Yeah,
time that Patty?
yes.
I'm looking on the indicators and I can't find yours. Give me mine. What's the name of that Patty indicator, please? Okay, Patty reading session. Okay, one second. Let me take a picture. Okay, good. Thanks.
Yeah, no problem. All right, cool. Oh, all right, now that everybody is good to go, we're gonna move on to the next piece of structure. Okay, so this is one of the things that you guys need to memorize. Now, I'm actually gonna send this to all right. Cool. All right. Now we're going to talk about a couple other ones. The first other one that we're going to talk about is going to be a pattern that you guys have been kind of like you guys have been learning it, but I guess, you know, it kind of gets lost a little bit in translation. When it comes to news, right? So when it comes to news, there's a couple things that people need to learn. I don't know what symbol we can abuse today. We can use, you know, the same one on a different. Yeah, we'll use this. All right. What is going on here? We will hide indicators. We will go to the daily, and we will run away from the world. All right. So the first thing we need to talk about is something called consolidation on news release. Okay. So consolidation on news release is very, very simple, right? So it ends up being something that we need to talk about in terms of we need to understand what makes up a consolidation on news release. So firstly, what do you guys think consolidation on news release is? What do you guys think it entails?
Accumulation of orders.
Accumulation of orders. Okay. Yes, correct. Right. There's going to be some accumulations of orders. Yeah. What else? What do you guys think is going to happen? Whenever that news hits, what do you guys think is going to happen?
So it's create liquidity on the both the side of the consolidation.
Right. Okay. Good. Clear liquidity on both sides of the consolidation. Very good. What else? Does anybody have any other
Reversal or
thoughts?
order block forming.
Okay, yeah, that's actually a nice observation. Yeah, sometimes there will be, you know, there will be order blocks present. Yes.
Expansion, sir.
Uh,
Go ahead.
Creating a spring.
Expansion of next movement.
Right. So on news release, there will be a large expansion. Go ahead, whoever was trying to talk.
Sir, it form a structure like a spring, and then it will go either upside or downside after consolidation.
Oh, right, exactly, right. So that's actually spot on, right? That's actually pretty much what happens. So let me actually yeah, there we go. All right, cool. So I'm trying to make like a little hot bar up here, which is pretty cool. So the first thing that we need to realize about you know, consolidation and news release is that obviously by the name there's going to be consolidation. So we can kind of think about it like a mini Asian range, right? So this is actually pretty cool because when can we find this type of model? Well, a lot of times if we have an Asian range that is very, you know, consolidation-y, right, as we see right here, you can actually see that you can actually see that at this point, right? And let's say that there's consolidation, and then on the next day there's news release, right? What ends up happening is this model comes into play, right? So when this model comes into play, this actually ends up being your, you know, your this ends up being your setup, your model, the model that you're going to be trading on the next day, right? 1 second. Okay, sorry. I just got a message from my school saying that my credentials are suspended because I didn't take a COVID test for mitigation. Oh well, I'll do that. I'll do that after we're done here. So, all right. So what happens now is we trade this like a regular consolidation, right? We don't trade it. That's the whole point. Now, what ends up happening is, firstly, we have to expect a news release. So that's something that we can say, right? So we expect a news release usually during New York, right? Usually during New York. Why? Why usually during New York? Because generally, right, the release of news during London is very temporary. And also it won't continue the rest of the day, right? The whole day won't last on just London news, right? So London news isn't going to hold the whole day. Now, the first thing that we're going to say right here is, next, what do we expect? Let's say this is a buy day, right? Let's say this is a buy consolidation day. So our final target will be up here, okay? This will be our final target. In this case, what would we expect to happen?
It will took the sell side liquidity.
Right. So in this case,
liquidity, break of structure, and then mitigate.
so in this case, we actually wanted to go a little bit lower, right? So we wanted to take sell side liquidity. right? And then from there, we would like it to create a low, right? So whether this be a low like this, like on the pattern we just saw, or it could even just form a low, like a regular low, right? It could just form a low during London, right? Meaning that it could literally just create a low, retrace, boom. Now you have a low, right? Usually price will hang out around this area, around the low that it made, right? It'll hang out around the low that it made. And when it hangs out around the low that it makes, what ends up happening is it's actually going to hold there for a very important reason. And the important reason why it's going to hold there is because it's actually waiting for what? What is it waiting for?
For more order, buying orders maybe to come in?
It's
Waiting for the more sales order to be coming.
it's actually waiting for the news release, right? So it's waiting for the news release. Orders are being tapped, right? So orders are being tapped in. And usually what you end up seeing on news release is you end up seeing a whiplash, or what people consider whiplash. The only thing that whiplash is price going back for orders to activate them and trigger the chain, the domino effect that actually ends up happening. So what ends up happening is, let's say price actually, comes back in whiplashes, right? Let's say it whiplashes and it comes all the way back down here, and now it skyrockets. The reason why it did all this is because it needed to activate its orders and then skyrocket, right? Remember that banks will try to get as many people out of the market as possible. So kind of start thinking like you're trying to stop people out.
In what time frame should we look to see this? But I mean, I know it's going to happen to all of them, but can you see that in the daily or mostly in the 1 hour, 4 hours and lower?
Okay, so let's think about it. These are all day trading models, right?
Okay,
So
1 hour there.
what are our day trading timeframes?
1 hour or less?
1 hour, 1 hour or 4 hour maximum, right? 4 hour is you use the 4 hour as if it was your weekly time frame, okay?
Yes.
And you use the 1 hour time frame as if it were your week, as if it were your daily, and you use your 5 minute to find entries, right? Okay. So if we keep that into consideration, we should usually see this on the 1 hour, 5 minute, 15 minute, 30 minute, right? You'll see it from the 1 hour or less. All right. Now from here, as soon as news hits, usually it hits around 8:30. Do you want to be finding reversals for these? Do you want to be finding reversals for these or not? What do you guys think?
No reversal.
No, right? You generally don't. You generally don't want to be finding reversals. So do you guys remember what I said earlier? What I said about about finding reversals or finding continuations? What should we be focusing on?
Continuation.
Right,
Continuation.
exactly. So you should be trying to find continuations, not reversals, right? So that being said, if you're not trying to find reversals, then at this point you should either stay out because you missed the entry, or you wait until the next day. If there presents another entry, you can get in, but generally what ends up happening is at this top, it'll usually retrace a little bit and then it'll just flatten out, right? So for the rest of the day, it'll just be flat. So this is the consolidation on news release template. Now, this right here, I would like for you guys to keep in your notes, because this consolidation on news release is going to be very important for you guys as you guys grow in your trading, right? So when the next time that you guys see a news release, what you guys can do is you guys can refer back to this consolidation on news release, and you guys can see what happens during Asian session, right? Because remember, this right here ends up being Asian session. So your Asian range has to be pretty small, right? Now, London makes a low. And New York will hold here too, right? New York will hold here too. And New York holds why? Why does it hold? Why is it holding?
Because they
guys?
are waiting for the bank release.
Right. They're waiting for the excuse, right? They're waiting for the excuse to move. That's essentially why they're moving, right? Now, if they're waiting for that excuse, right? If they're waiting for that excuse, then what's going to happen is now it'll hold, right? And then as soon as news release happens, it'll whiplash and then price will skyrocket, or in this case, skyrocket, right? Because this is the bullish model. Now, how do you determine whether or not it's bullish or
Just a
bearish?
minute.
You
Sir,
determine,
if
huh?
sir, if the order flow is bearish there,
What?
if the order flow is bearish, then
The order flow is bullish here.
He's just asking in case if the order flow is bearish.
Well, that's what I was about to explain. So how do you determine whether or not something is bullish or bearish? The point of determining this, right, is that usually London will create the opposite side. But what you should also be looking at is where's liquidity being placed, right? What you should be looking at is essentially your 4 hour, right? You should be looking at whether or not where price should be going. And then once you determine where price should be going, example, if there's a liquidity pool, or if there's a rate on stops, or if there's an order block, sometimes even order blocks are hit by news releases. What ends up happening then is you have to end up determining, okay, now I understand that price is going in this direction for X, Y reason. And then you determine, all right, so now I'm going to look for the bullish or the bearish form of this setup, which is what you're doing here, right? In this case, you're looking for the bullish setup. In this case, you would have seen, all right, well, there is some form of bullish structure here, and you want to take the bullish setup, if that makes sense.
Yes, sir.
All right.
Can you repeat, sir, again on the small line, please?
What did you need me to repeat?
Bearish and liquidity graph.
Oh, all that's happening is that like the only thing that's happening is that at this point, right? If you want to determine whether something is bullish or bearish, you simply go on a higher time frame, right? 4 hour daily, and you look where price is going or where price should be going. And when you see, whenever you see where price is actually going in this direction, or let's say in this case there's liquidity. Let's say like right here, there was a previous high and price needed to raid those stops. Then boom, price would raid those stops during a news release, and it just used liquidity to catch liquidity, right? So essentially, you go on a higher time frame and you use your regular, well, looking for orders, looking for trades, and that's essentially what you do. You look at the higher time frames to check what where price is going.
So we'll look also the trend, right? The trend is the uptrend or the downtrend in the higher time frame.
No, you don't. Remember, we don't look at trends. What we look at is where liquidity is, right? Liquidity will be moving in a certain direction. Order flow will be moving in a certain direction. If price, if price is about to capture a piece of liquidity that is, characterized by a previous high, like let's say this, then in this case, what's going to happen is like almost the exact same thing that we saw here. There was previous liquidity back here, right, in orders, and now we went up, we shot, and we took it, right? So now once we take it, now price can go in a separate direction. Is there a trend? Maybe, but we don't care because we're looking for where price is going, right? We're looking where price is going because Price is going to bounce from liquidity to liquidity. That's all that's going to happen.
Okay, thanks.
All right, guys.
This GBP CHF can we look for the sell also after some time?
Not right now. I wouldn't. We're out of session right now. The algorithm's not even on. It's not going to do anything right now.
Okay, just now you explained it will move most likely. It will move sideways now.
Yeah. Mm-hmm. All right, guys. So that's going to be the first set of basically it's going to be the first set of day trading models that we're going to use or we're going to study. Tomorrow's class, we're going to actually study the next one. So the next one, I believe, for tomorrow's list is let me check my list.
Do you teach every day at 10 a.m.? I mean, 11 a.m. No, 9. Or what is it? Sorry, 10 a.m. Central. So that's 11. Do you teach every day?
So I'm asking Joe Martinez if I can add classes. So I might add a class on Wednesday. Usually Wednesday is my break day, but I might add a class on Wednesdays. I teach on Monday for the GoFunded students. So everybody that does their FTMO challenge with us, I'm doing a class for them on Monday privately. On Tuesday, I do this class. On Wednesday, usually I take a break. Thursday, again, another class. Friday, another class. But I may do it every day of the week, possibly.
How can I become a part of your first group from the Monday? Is that something we can do, or how does it work?
So GoFunded is actually a program that isn't that isn't beta right now. So it's not taking students at the moment.
Okay.
But essentially it's a beta group, and we're trying to work out the kinks of when to actually activate it. Because of time of year, so we don't want people spending money on their FTMO challenge and then failing because time of year is very slow. So we're working out the kinks and
I understand.
and stuff like that. So we're trying to be as very as proactive as possible.
Thank you so much. I enjoy your classes.
Yeah, no problem. So what's going to end up happening is we'll probably end up opening GoFunded a little bit later, but it is and we'll probably adjust whatever kinks need to be worked out. But that is for serious investors later on. So we'll work it out, don't worry, and I'll let you guys know if something happens.
So
Mhm.
earlier you said that algorithm is off. What does that mean? You mean IPDA today?
What do you mean? Sorry, repeat that. I couldn't. You cut out a little bit.
You earlier said that now is IPDA. No, IPDA mean,
IPDA
say,
true day.
is off right now.
Right. So remember, IPDA true day. When does the true day end? Well, no, IPDA true day hasn't ended yet. What's it called? London close kill zone has ended. When does it close?
Yes,
When does the IPDA true day end?
3 p.m. Eastern time,
Mm-hmm. And when does it start?
12 a.m. midnight
Mm-hmm.
EST.
Exactly.
So according to the Indian time, 10:30 a.m. IST, and it ends 1:30 a.m.
I assume so. Yeah. Mm-hmm.
What's up?
Yeah. I assume so. I don't know. I don't have the conversion to IST right now, but yeah.
It's basically a Frankfurt session, no?
Sorry.
If the true day is a Frankfurt session,
Frankfurt session starts at 2 a.m. Eastern time. All the times that I'm gonna say are in Eastern time. I can't. I don't know any other conversion.
Okay, sir, no problem.
James, one quick question.
Mm-hmm.
The CBDR thing that you mentioned, which you said that it happens every day between like 2 p.m. to 8 p.m. EST. Like, does it happen every day, or like it happens on certain specific days?
It happens every day that isn't a Sunday.
Okay, so and
Or-
does
or
it
a
set
Friday.
up? Okay, and you said it sets up the market for the next session. So like, does it set up the session? Does it set up a market for the next Asia session, or how does it work? I'm so
So
sorry, I don't have
it
any idea about
sets up. So it sets up. So okay, I did a class on this. So I'm trying to get it uploaded. Apparently, it doesn't want to get uploaded. We're still waiting for access to upload our upload our classes, because our classes, like, we can't upload them for some reason to the Vimeo. But essentially, so I'm actually going to cut off the, well, actually, no, I'll answer this question, then I'll cut off the recording. So CBDR, right, which is this right here, it's during a time that the market is not very volatile. It's essentially a reading of the market and its volatility. If there is small amounts of volatility during CBDR, that generally means that the next day will be a normal day. Basically, you'll be safe to trade. And what it'll also do is it'll set up the daily range. So on average, price will move. So this right here is one standard deviation, right? This is the original, this is the origin. Usually price will move within 1 to 2 standard deviations of the regular CBDR during a model day, during a perfect day. As you can see, price moved about half a standard deviation before reversing. So we're still within our 2 check, right? But price will usually, in the direction that it goes, it'll usually go about 2 to 3 standard deviations away from the origin. So as you can see, we have 1, we have 2, and we have 3, and we almost touched the third, but we ended up stopping at around 2.5, right? So this essentially kind of helps you find a take profit too, because it ends up helping you kind of say, okay, well, price will essentially come from, so price has already made the low of the day, right, at this point. And now where can price go? Now price can go 1, 2, so at least from 2 to 3. And that's essentially why you can put your take profit right here. So it's kind of like a range finder, if that makes sense.
But there is an indicator called CBDR.
Okay. Does that make sense?
Yes, James. The standard deviation that you have created, is that an indicator? Like you have, how did you mark it?
It's a tool basically, not an indicator.
Yeah, it's a tool, not an indicator. It's a tool that you go up here where your fib retracement is, and you put up the GAN box.
Okay. Yeah, thank you so much.
Yeah, so it's right here. It's the GAN box. And these are the coordinates right there.
Thank you so much.
No problem.
so I want to know about midweek reversal. What does it mean, and how we can see that?
Midweek, yeah. So midweek reversal is just, I mean, it's literally the name. It's just usually the market reverses at midweek. There's nothing to it. That's all it is.
Can we find the entry on the basis of that?
It's not meant to find an entry. It's meant to find your range. So usually you see Tuesday, Wednesday, Thursday. Has it reversed yet? No. Why? Then you look at the daily and you're like, okay, well, maybe there's, it doesn't always happen, but generally midweek reversal, generally around the middle of the week is when you have the biggest chance to reverse. So if you're looking for a reversal, or if there's something there, look for a reversal, because usually the midweek is when it reverses.
Generally, it's Tuesday and Wednesday.
What?
Generally, it is Tuesday and Wednesday, I think.
Yeah, usually it's Tuesday London session into Wednesday New York, or Wednesday London into Thursday New York.
Okay, thank you, sir.
Uh-huh.
So I have a question. May I ask?
Yes. Mm-hmm.
So, so I want you to assume a situation where price has broken the structure on downside, making it a point of interest. Let it be breaker block or order block, and reaching to the point where there is a bullish order block and retraces from there. So, will that upside point of interest will be valid or not? Did you get that?
Not really. Can you repeat it?
So, sir, basically, what I want to know is that just imagine a situation
Uh-huh.
where price has broken the structure on downside and
Mhm.
making a point of interest. Let it be breaker block, order block, mitigation block, and it is reaching to the point where there is an bullish order block and retraces from there. So, will that upside point of interest will be valid or not if it is retracing from downside? Where it is there is an breaker block or order block, whatever point of interest.
Okay, so I think I know what you're saying. So if there's like a break of structure to the downside, and then there's a higher time frame order block beneath it, what's going to happen, or who's going to win, basically?
So basically, he's
Price,
asking up. I think opposite of what happened to just now to GBP CHF. He's asking opposite to that. If something happened opposite to
no,
this.
no, bro, nothing like that.
Mm-hmm.
Sir, if price has reached to a point of interest where it is reversing, so will that downside point of interest will be valid to take entry or not?
Yeah, until you reach the order block or the higher time frame point, because remember, a higher time frame is going to always dominate the lower time frames. So that's what's known as crouching outside an order block. It's something that's a little bit more advanced, but essentially what ends up happening is, like, if on lower time frames, if there's consolidation, right, and then you see price break structure, and then there's a higher time frame point down here, generally it's valid to take as long as you put your take profit there, because there may be some sharp reaction from it.
Okay.
Does that make sense?
Yeah. Okay.
I mean, does it make sense or no?
Not yet.
Okay, so there's okay, so this here is your order block. And let's say you found it on, it has to be on a higher time frame, okay? So let's say you found it on a higher time frame. So this is your higher time frame, all right? And you have some sort of consolidation. You said there was consolidation there, yeah?
Yes, sir.
Okay, cool. Now there's a break of structure, and let's say we're using a breaker block. So we take this breaker block. You're just asking if this is valid to take if there's an order block coming near it. Correct? I think that's what you're asking. So in that case, you definitely can, as long as your take profit is going to be near the order block. Does that make sense?
Okay, sir.
Does that make sense?
Yes, sir.
Okay, cool. All right. Awesome, guys. So make sure everybody gets these notes in here. All right. I'm just making some final adjustments to it.
So what is the use of market maker, buy model and sell model?
That's a completely different class. I'm not. I'll do it. That's a very different class.
Okay.
You shouldn't even worry about that until you know these profiles, because those models are probably one of the most advanced things in smart money, because they're harder to spot. They're essentially, it's a way to understand structure in a little bit more complicated of a way. So you need to hold on to that. Okay, trust me. I know they're interesting. Just learn these first, and then master these, and then you'll learn those. All right.
Sure, sir.
Cool. I hope everybody gets this. I cannot send it to the Telegram anymore, guys. So please, if you guys need to take a screenshot, take a screenshot now. All right. All right. Does everybody have it?
Yes, sir.
All right. Cool. All right, boys and girls and everyone in between. I think that's it for today. Does everybody have this screenshot?
Yes, sir.
Yes, sir.
All right. Cool. All right. Awesome. All right, guys. So I think that's going to be it for today. Tomorrow we have another class. So I hope you guys take that into consideration. Hope to see you guys here, and I'll see you guys tomorrow.
Sir, he sent some pic. Can you check?
Huh?
I guess someone shared a link. Can you please check?
Oh.
Recording in
I mean, that's a very, I don't know. I can't see it. Hold on. Guys, at the end of class, I'd rather you send these links at the beginning of class, because at the end of class, it's a little bit more different. I'm going to actually stop the recording. Hold on.